So most of the questions we get, tax relief, just like any of the other exemptions, can be very complicated. So this is your basic rules, your basic understanding of what tax relief is. Every phone call we get is completely different, has a completely different story, different circumstances to it. I have to go back to the table and look at it and just kind of give them the basics, but then a lot of it comes down to you and trying to decide what you think and then letting the Board of Equalization decide. So I guess my first question is who's responsible for granting tax relief? Jill? The Board of Equalization is responsible for granting the actual tax relief. The auditor in most counties is responsible for collecting the information, collecting the data. You make a recommendation to the board, but it's their call. And I would encourage you to make sure that it is their call. Put it in their hands and let them make the decision. There is a few counties that the treasurer's office is responsible for that. I believe there's about 3 of them. Salt Lake, Rich, and Garfield, I believe. The treasurer's office handles tax relief. One important thing to remember or to know when we're dealing with tax relief is there's a difference between exemptions and abatements. Craig, do you know the difference between an exemption and an abatement? Okay, so when we exempt something, what are we exempting? Yeah, we're exempting their value. So when you abate something, Pat, we're abating the taxes. So you exempt value, abate taxes. Those are 2 important distinctions. So when we look at this, we have the exemptions like they were saying up here. The first 3, those fall more under the category of exemptions, where we exempt amounts of value. Down here, these fall under the category of more of an abatement, where we deal more with the taxes. That's a little blurry to me. How is it for you guys? Can you guys see the numbers on that? When we go through this, we've kind of put this in categories that are pretty understandable. The first one is mandatory or discretionary. The only one on that is not mandatory is the indigent abatement. Does anybody know why that is? I'm not sure why they decided to do it that way, but it's discretionary and it's up to the county. You can see in this column, it's discretionary and it's up to the county to decide whether or not they feel that person qualifies for the indigent abatement. Usually when we deal with circuit breakers right here, the state is responsible for circuit breaker, and the contact information is right down here. It's Jan Duggar. She is responsible for circuit breaker. So usually somebody will apply for the homeowner's credit right here. And when they apply for the homeowner's credit, they automatically qualify for the homeowner's valuation reduction. And the county gets that. And then they abate the taxes if they feel necessary, mandatory if they meet the requirements to abate those taxes. And then the state will reimburse them for the money that they lost out on. So that's why that's how the state is responsible for circuit breaker. The renter's credit right here. The tax commission, Jan Duggar, is responsible for that. She determines the eligibility.
This might be a weird question.
No.
Why is it called circuit breaker? I get that question all the time and I don't know how to answer it. Why do they call it circuit breaker?
I know Ruth Ann's explained it has something to do with the way when it was set up years and years and years ago.
Originally, this tax relief was allowed on an income tax return. But the income tax people didn't want it there anymore, so they pushed it off onto property tax. And so a circuit breaker, think of what a circuit breaker does in your home. When the power is too great, what happens? It shuts down, doesn't it? Oh, this tax relief is for indigent people. People that don't have the money to pay their property tax. That's primarily the people we're dealing with in tax relief program. They don't have the money, so it kind of shuts down and the state gives them a break. That's the explanation as to why it's called circuit breaker. Now, if you try to find the term circuit breaker in the code, you know I'm an old stick in the mud when it comes to the statutes in the code. You will not find the term circuit breaker in statute. It's called the homeowner's credit, just like we have listed up on the screen. It's a homeowner's credit, and as Josh says, the valuable part of that homeowner's tax relief is not necessarily the credit, but it's the valuation reduction, because they get a 20% in addition to their 45% residential exemption. So now their exemption amount is up to 65%. So if they're entitled to circuit breaker, that valuation reduction, they only pay taxes on 35% of that.
Yeah, when somebody applies, like we said, that when somebody applies for the homeowners, they also qualify for the homeowner's valuation reduction. And if they're doing that, they probably should be filing for the indigent abatement as well. And that's a lot of tax breaks that they can get. Vicki?
I would say not always.
Not always.
Program, because I have a lot of elderly that their income is less than the limit, and they may get $6,000 in interest. So they have a lot of
Yeah.
money they could pay with using this.
Yeah, so it does depend on, you have to look at the different ways they're getting income and how that applies. Somebody else?
On the homeowner's credit,
Yeah.
it says that it's mandatory, and over on the amount, it has $939.
Mm-hmm.
What if their tax liability is $1,000? Is there a percentage in there, or do they get the whole $939 and they pay the other $61, or what happens?
It depends on, let's make sure I get this right. It depends on their income, right here. 31,000 was the limit, and that goes up every year. But 31,000, and then there's a chart depending on how much you make to get up to that 939. So if you're on the low end of that income, you're going to get it credit up to 939. So if you did owe $1,000, you would have to pay whatever's left over after the 939 is applied to that.
Okay, so it's not just a straight $939.
It's a graduated scale. There are 4 levels.
And on the form that they filled out, it has those levels on there.
The term circuit breaker actually is sometimes put in the bill when it goes to the legislature. I've seen bills that actually say circuit breaker, changes to circuit breaker, and then it deals with the homeowner credit and statute. And that's where it comes into the, sometimes these terms you don't see in statute are actually on the bill name itself, but it doesn't go into statute, and that's why it's kind of confusing sometimes. I just wanted to clarify that.
You're right. It'll call, the title of a bill going through the legislature may be circuit breaker adjustment. But when you get into the statute and it lists the statutes that they're changing, they will not use the term circuit breaker in the statutes. But in the title of the bill, they'll call it circuit breaker because everybody knows that term. It's been used for forever.
Social workers who deal with people who are indigent, they will tell them about circuit breaker. People who are struggling, there are social services for them, and people will inform them of what they will call circuit breaker relief available to them, at the senior center, et cetera. And so that's where these terms kind of develop a life of their own.
So Dean, I'm going to ask you then, if somebody has a very, very low income and they qualify for the $939 abatement, but they only owe $800 in taxes, do they get money back? No. No.
Can they use part of that to pay their motor vehicle?
Absolutely.
That's what I thought.
So
Pay their motor vehicle fee, right?
Well, it depends.
Every cent.
They're entitled to so much credit.
Right.
If they, usually, and practically all cases, it's applied to a home. But if perchance they have extra credit left over, they can use that credit on an automobile or
Isn't
personal
that just
property,
the
as long as it's not business personal property.
So that's just indigent and, but I know veterans can, and indigents can as well.
Well, indigence is a whole different story. We really don't want to tie the indigent with the circuit breaker. They're two separate programs. The indigent program is there to help, really extenuating financial circumstances for individuals that, a flood wiped out their house or something, and medical reasons. So the indigent is a judgment call by the Board of Equalization. The circuit breaker is mandatory, it's because it's listed in statute. If you meet the requirements,
So
then you have to give
a
us.
circuit breaker and veterans can qualify for that one. If they don't use it.
Right.
That's right.
So over
Most
here-
often it's the veterans with a disability use it on.
And what she's saying is right here in this column, eligible property. Over here we have only owner occupied, and I think Ruth Ann's saying in most cases $939 isn't enough to take care of all their property taxes, I think in some cases, especially in the larger counties. But up here for eligible property for the military, if they would have to have a home greater than $500,000 for them to have that whole exemption go towards just their house. So if they had a home that was only about $400,000 and they got the veterans exemption, they're probably going to have some money left over to go towards their personal property vehicles. Is there any other questions? I think we need to point out that, like we said, yeah, go ahead. I believe, as long as they're still eligible for more credit, and it's not, as long as they're still eligible and it's not for business. So they could have a boat or an RV or. Well, we needed to point out that this is not circuit breaker, and this, when they apply for circuit breaker, if they meet it, they're required to give it to it. But this is definitely county, where you use your discretion, where if you see a lady come in a Cadillac with some diamond rings on, you might want to look a little bit more into her financials and find out how much money and where it's coming from.
It's one of the veterans exemption, if their home's $150,000 and they have a boat that's $50,000 and the RV that's $42,000, that would put them right, or $52,000, that would put them right at their taxable value.
Mhm.
So they can receive it on everything up to that value.
Up to that 252. And also, they need to make sure that they file by September 1st. September 1st is the deadline for all those except for the renter's credit, but since the state gets that, that's December 31st.
Now, there's a point we need to make on that, on the veterans. Be careful with the veterans. If they do not file on September 1, the law allows some wiggle room. They, in fact, a lot. Sometimes Veterans Administration does not issue a disability percentage for 2 or 3 years or longer after the veteran really is entitled to that disability. Under the law, you can go back 3 years on a veteran's with a disability exemption. Sometimes they don't get their letter from the VA until after September 1st. Well, that's an extenuating circumstance that the law also covers. They give the law, and the tax commission has been very lenient with the veterans. So, in fact, every appeals case that has come to the tax commission relative to a veteran's exemption, the tax commission has sided with the veteran and allowed their appeal. So we want to be kind of careful with that.
And I think even as you read the code, it always says like it's due September 1st and then gives an exceptions, except this or except that. And a lot of them have, up until December 31st, give you some wiggle room because they feel like these people need the tax break. And so you need to do what you can to help them out. Vicki, you're in charge of it in Utah County. Do you have a procedures manual? Is there something that you follow? And that's not necessarily a bad way to go. I mean, it might not be bad to have your own procedures manual, but if you don't have anything and you can tell somebody like, look, we follow the standards and we always do follow the standard of practice, that's a good thing to do because what can happen is if somebody complains and says, well, I know you gave it to this person, you can say, no, we're fair and equitable, we do it, and this is how we do it all the time, and we follow these rules.
Anytime we have a denial, it goes before the Board of Equalization. They sign a letter of recommendation, or I take everything to the attorney's office. They do a letter of recommendation to the Board of Equalization on every denial we have.
And let the Board of Equalization make the decision. That's good.
Can I input here?
Yeah.
I think it's very important that your, not only that the auditors obviously know this, but the tax collection people, because probably the people that we've helped the most are people that have come in and talked about, how am I going to pay for my taxes? And if we didn't know this information to give to them and take them to the auditor's office, it happens every year we get somebody. I mean, last year it was an amazing, the couple literally skipped down the hall finding out that they qualified. They honestly didn't know how they were going to pay their taxes. They were dipping into their food fund, and it was amazing. But had we not known that and said, no, your taxes are due and blah, blah, blah,
Yeah.
It's important for your treasurer and your auditor to talk about that and make sure that they understand that, because the front line of this, for people who don't know about it, is going to happen.
And that's why we were hoping like something like just this is the basic information for the people that maybe don't deal with it. You may get questions, and this might help you answer the basic questions that you get in your office. Yeah. Is there any questions with the active duty armed forces? This is a new one that was a couple of years ago. Dean?
Not with the armed forces. Are you gonna discuss that paragraph at the bottom?
Yeah, do you need to pull that? Can you see that?
I'll wait for you to get there. There's a real question I got embedded in that.
No, go ahead and ask. I mean, it's just kind of down there as a footprint, so footnote.
My past life was spent as a newspaper reporter.
Okay.
And therefore I got lots of folks that said, put some pressure on the county by doing a story, because we had a person who was delinquent in their taxes, was not aware of the September 1 filing date. Property eventually went up for tax sale. It says down there, in the judgment of the taxing entity, the best human interests or the interests of the state. What does that mean for making the decision? What are the guidelines, parameters for that?
That's up to each individual county. Curtis?
Our attorneys, we went through this with our tax sale this year. Our attorneys specifically directed us that the code gives broad discretion to the commission or the Board of Equalization. It's specific, it's broad just for that reason. If it's in the best interest, then that's why you elect those people to make that decision. As the auditor on one particular property, we made the recommendation to go back because we looked and they provided documentation. There were some medical issues. 2 years, they had missed some of the exemptions and the circuit breaker for a couple of years. The commission or the Board of Equalization said it's in our best interest to go and abate those taxes. Having said that, and could they have, the taxpayer actually requested that the taxes just be forgiven, basically. Our recommendation as the auditor was, yeah, we can see there were medical conditions, there's clearly history, let's do this. But once you open that door, it's gonna get ugly.
It is.
And so, but that's why you elect a great board of equalization.
I don't know if any of you watch Blue Bloods. Great show. I love Tom Selleck. But they were sitting around the dinner table, and somebody explained to it as the broken window theory, that you have an empty warehouse, and all the windows are fine, and people walk by and don't think anything of it. But if you walk by, some teenagers walk by and they see a broken window, what are they going to do? They're going to pick up a rock and throw it to the window. And that's kind of what he's saying, is once you open it up, now you're in danger. And that's the importance of having a procedure manual, that if you have that manual, and you have to be fair and equitable, because if the next person comes in with a very similar situation, you're probably going to have to do the same thing for them as well. So you can say, look, we did it for you, and we did it for you. Diana?
On that same issue, Curtis, our Board of Equalization last year had granted some retroactive abatements, and we got written up by the external auditors as being out of compliance with state, with statute, and because it only provides for you meet that September 1st deadline, the end. So now I'm structuring them more on under like a settlement or a deferral, and then asking the Board of Equalization there, because we're not limited by a time frame there. We don't have a deadline.
And yeah, it's a slippery slope. I mean, and these are here to help the people that need it. We're trying to give a tax break and tax relief to people who really need it. I do know that Salt Lake County was going around to some of the retirement homes and whatnot, trying to let these people know what was going on. And I did hear some rumbling that some people were unhappy with that because of what Ruth Ann said earlier on about if 10 people go into the restaurant and only 2 leave and 8 pay, if someone's getting tax relief, there's a tax shift on somebody else. So there's like this fine line of, we want to help the people that need it, but we need to make sure we're only helping the people that need it, and we're not going above and beyond.
And remember, this is not just county money, this is mostly the schools. So
50%.
you got to look at the school children versus the interest of the taxpayer. And that's a tough decision, and the best human interest, in interest of the state and the county, is a judgment call. The statute has been left vague to allow a lot of, movement either direction on the basis of what the Board of Equalization decides to do. But it's one of those things that.
And I bought this brand new truck in 2007, and when you buy a brand new car, what do you do with it? You just baby that thing, and you wash it, and you clean it, and you really take care of it. And I was using it for construction and landscaping, and so it started getting dinged up. And you just, after a couple of years, you just start not to notice those things anymore. And now if you go out in the parking lot, like half my car is bashed in on the side. And I just let it go so far that I didn't worry about it. And the same thing is, some of you going into your new office may want to look at some of the procedures that are done, because a lot of people just say, oh, it's always been done that way, or that's just how I was taught. But you need to take a look at it and say, do we need to tighten this up a little bit? Do we need to make sure we're following the deadlines and that we're being fair and equitable to everybody and not just willy-nilly? And if somebody's been in your office a long time, you may want to look and say, okay, I was really strict at first, but have I kind of strayed a little bit and being a little bit more lenient, and maybe get back to straight and narrow? Dean?
The comment was brought up that the external auditor said they were not in compliance. Is there a legal definition about adjustments and deferrals that change that from abatements, where it says they have the ability to grant retroactive adjustments or deferrals, but is that going to be discriminated against, and an abatement is not allowed as a retroactive?
That's a good question.
I just have to go back to the law. And the
September
law
1st.
says, there's deadlines and such, but the county, through this statute, 59-1347, has much discretion. So it's the discretion of the county Board of Equalization or the county governing body, how they're going to handle it. And you can always pull up that statute to say, that allows us the authority to do what we want to do. And we've decided we want to do it this way. So I don't know how the external auditor is going to
Well, on the,
contradict that.
like interject, that 1347, that deals specifically like with the PT 33, which is a deferral.
Well,
So
yes,
it's
it's
not the
deferrals and abatements. Yeah. When it comes to circuit breaker, you gotta follow the law, and it's very specific. When it comes to the other exemptions, like the blind and the active duty military exemption, that's specific. You gotta follow that law. But when it comes to low-income indigent people, then you have, as a county governing body or the Board of Equalization, you have much discretion on how you want to handle those cases.
So does that discretion include penalties and interest once they pay late? I mean, what if they come in December and their taxes were in November 30th and we send them down to the auditor to apply or whatever and it's grounded by BOE, then what about that penalty and interest? That discretion goes along with that too, where they can waive that penalty and interest?
I would think it's
I
discretion.
think
I would think you, I mean, if somebody was in need of the exemption and they didn't know about it and they applied late, I would think you would be able to take care of that interest and penalty. But it's probably discretionary, and you want to make sure you're doing it the same for everybody.
But that's a board decision. That's not a county auditor or a county treasurer decision. That's a board decision. And what we recommend is that the county auditors and county treasurers that are handling tax relief, you take that, what you have, the decisions you've made, and you get the Board of Equalization blessing on it, so that you're clear. Because if you don't want them coming back on you, the governing board, Board of Equalization, has discretion for the county. So we recommend that you take all your circuit breaker, all your tax relief, the exemptions have to go to the board. But on the tax relief, you also run those through the Board of Equalization to protect your.
So all the people that are on the board or on the county commission, we're making you feel good right now, aren't we? We're putting it all on you. This is all your responsibility.
But you know what, in all seriousness, we have a very good relationship with all the people up and down that line, and we work closely with the clerk and the auditor, it's not as lonely a position as you would imagine, because we try to do what's right. I mean, looking at that wording down there that you just moved down just a little bit, the best human interest and the interest of the state and the interest of the county, I mean, that's.
It is. You're supposed to serve the people, and you have to make sure the government's, you know, that your county is running properly as well. And
So we try and be as impartial as we possibly can and go by precedent.
yeah. Yeah, obey the law, have a procedures manual, rely on your county attorney. If you're doing those things, you're most likely going to stay out of trouble.
The one thing you need to remember, when we talk about the statute, we're interpreting the statute, but one of the things that the statute does provide leeway to elected officials, because you guys were elected by the citizens of your jurisdiction. We were not. They can't unelect me as a research consultant of the tax commission.
Some of us would like to.
But you guys are elected officials, and the statute provides to you a certain amount of leeway. And because of that fact.
I know, Ruth, I've gotten several phone calls, and Ruth Ann said to me, use common sense. I mean, because everyone's different, is use common sense. And it was funny because on this particular situation, my common sense was different. But somebody called and you know, basically said, I'm a veteran with a disability, and my wife is as well. Can we both apply for the exemption on our house? So if you have a wife and a husband living in the house, and they're both veterans, and they're both disabled, say they have a really nice house, can they both get the exemption? And this is where I was like, oh, you know, that's what I thought. But then Ruth Ann explained something very important to me, is that the exemption applies to the individual. Not to the property, to the individual. So that's one thing that really important that I've learned in the year that I've been doing this, is that the exemption applies to the individual. Try to be fair and equitable, try to follow the law, have a procedures manual. And if you do those things and just follow some of the basic rules, hopefully everything will be okay. I hope there's probably a lot more questions. If there is, feel free to grab us during lunch. Vicky?
I have a question on that, because in Utah County, if we combine the rating to not go over 100%. So are you saying that if he is 90 and she is 90, and one doesn't cover, and it would go higher than 100%?
Well, they wouldn't get any money back.
No, I'm not saying
But
get it back, but I have,
they
a lot
would-
of my younger veterans have really expensive houses.
So they would get a credit if both of them, you know, 90% of 252,000, and then the other person would get 90% of 252,000.
Right, 'cause that's 222.
So roughly, what, I don't know, do the math for.
So they both.
It's going to be like $800,000 worth.
File separate applications under their name. And they could
Yeah.
go more than.
So most likely, if you have two people in your household, maybe you're most likely going to get your house and all your vehicles taken care of.
Because I have some that have $600,000 houses, you know, so the taxable value, they still pay the young veterans.
Yeah, but if there was two in that household, most likely it would be taken care of.